Good day guys, welcome to Vitala Stocks Money. Welcome to the computer screen. This is part 2 of the first video on which we are trying to identify fake forex traders and fake forex trading educators, right? If you haven't watched part 1 of the video series, please go back and watch part 1 so that most of these things you will hear make sense, right? So in part 1 we have discussed the conflict of interest that exists between the broker and the retail traders, right? There are 4 conflicts of interest that exist between the broker and the retail traders, which is us, right? And then there's also a conflict of interest that exists between the trading educators and us, right? So mainly this is exhibited in the IB agreement, right? 95% of forex traders or forex trading educators have IB agreements. These agreements allow for the brokers actually to pay the trading educators to like 25 to 30% of the commission that is paid by the retail traders on the brokerage platform, right? So if you have used an affiliate link from a trading educator, maybe he's advertising the link on Instagram or anywhere, telling you that this the broker is recommending, he trades every day, 24 days or 24 hours a week, and he's trading every day, and therefore he highly recommends the broker. Like, yeah, I believe you have seen this kind of advertisements on social medias, right? And therefore those are IB agreements, and therefore what the trading educator is essentially doing is that he's inviting you to use the link and the affiliate link, and then go and trade on the platform. And whenever you trade on the platform, actually when you pay the spreads, the trading educator will get 25 to 30% of that, right? So that's essentially what happens there. So that's an IB agreement, and that's a conflict of interest that exists between most of the trading educators and the retail traders, their clients or their students or whatever they call themselves, right? And therefore we have seen the conflict of interest as well that exists between the brokers and the trading educators, or the retail traders themselves, right? So the 4 streams of income that they generate, and that all of them are against the idea of us as retail traders making money. So in this series, we are going to now look at step by step, as I said in the PowerPoint, on how to identify step by step point to identify fake forex traders and fake forex educators, right? So we have this. We are listing out now the myths. We are listing the myths and red flags perpetuated by brokers and charlatan educators in the rest of the world and in the US as well, right? So number one, what most of these fake forex traders and fake forex trading educators will do is they will promote and they will say that day trading always works, right? This is one of the things, the key things you should watch out for when they say things like day trading always works. Very critical, right? So we know it doesn't always work because the trader is a slave to volatility, and the trader doesn't tell the market what's possible. The market tells the trader what's possible. So day trading doesn't always work, right? Very critical. So I want this video to be about 20 minutes long, so I might be rushing up and down here, but if you pause the video, you can also take a reading from the notes I've taken there. So yeah, you can help yourself out there. So in fact, we know that day trading doesn't always work. It works in the minority of cases. It only works in history. In the last 15 years, it worked 20% of the time on average, and that is a statistical analysis you can't argue with. Like if you look at US equities, specifically the major forex space, and 80% of the time it hasn't worked. The odds are not in your favor. Trust me. If in my later videos I can show you the calculations through spreadsheets, and you take the daily open and the daily close of the S&P 500, the largest stock market in the world, and you look at it, the odds are not in your favor. So what this does essentially is that then when they say these kind of things, day trading always work, this guarantees volume every day for the broker and the educator. And if you want to know what volume means for the broker and the educator, you have to watch part 1, because when the broker is incentivized by more trades. The more trades you enter, the larger the size of these trades are, the more money the broker makes, because the broker makes money through spreads and commission. If you enter a trade, the broker gets money. It charges you a fee, spreads and commission. And therefore, if you enter more trades, then you are paying more fees, and therefore if the trades are large, then the fees are large, right? And therefore, by them saying day trading always works, it guarantees volume every day for the broker. And therefore, because then the trading educator with an IB agreement is also paid from the spreads you are paying. Basically, then if you are trading every day and you've used the affiliate link and you are paying spreads and commission, the trading educator will get 25 to 30% of the spread you are paying there every day. Therefore, it guarantees that there is volume for them every day, for the broker and the educator, right? So number 2, you will find them saying that it's better to not have overnight risk and to exit your positions before the close. This is complete nonsense. they will tell you that it's risky. You close your trades before the market closes and all of these kind of things. You're afraid of you're afraid of the overnight risk or the gap in the market, or you're afraid of the charging the fees that you pay for overnight, right? Now, this is actually nonsense, because this will actually guarantee that you are going to pay spreads 2 times and commissions 2 times. And therefore, because you are going to close the trade and then you will enter another trade tomorrow again, and therefore the educator has no idea. And this also just shows to us that the educator has no idea about risk. He has no idea about risk. He has no idea about hedging, which means that they know nothing about trading at all. If they are telling you these things, that it's risky to have a risk overnight, and that they will rather advise you to exit your trade. They basically have no idea, have nothing. They know nothing about trading, because risk can be hedged out overnight. It can be hedged out for months with assets that are correlated. And that's basically what hedge funds do, right? So number 3, they will also tell you that one of the things you will to recognize that this person doesn't know anything about trading, and he's a fake trader, and he's a fake forex trading educator or financial market trading educator, stock, ETFs, bonds, commodities, anything like that, cryptocurrencies, also part of the financial asset classes. They will tell you that you can make a monthly income from trading. This is what they will tell you. They are selling you dreams. They will tell you that you can make a monthly income from trading. We know that that can't be true at all, because you need volatility. That cannot be true. You cannot make a monthly income. You can. One of the famous slogans is this. They say make $10,000 a month trading the international forex markets. Very, very typical of them. You will see it on the YouTube videos. They will say make $10,000 a month trading the forex market, right? And then they will say get the life you deserve, right? So this is very interesting. This is quite funny, because actually you are getting the life you deserve, because you're not being serious. You're not scrutinizing. This is not look at the realities of how other things happen in life. They are making it look like it's easy, right? Make $10,000 a month trading the forex market. Then we would have had a lot of rich people if these things were so as simple as such, right? So then they will sell you. They're basically just trying to tap into your desperation and sell you these dreams, right? So they will say things like get the life you deserve, make $10,000 a month trading the forex market. And so what if the forex market doesn't move, right? And this can happen. What if the forex market doesn't move? If I had some charts here, because of time, I would have showed you exactly. I would like a forex pair will just be fluctuating between $1.80 and $1.85. And therefore, what do you think you'll make money from there? No. So these introductions will try to get a monthly income. So this is just basically them guaranteeing the trading educator monthly income. Because what does it mean? If you are going to trade every month, on a day-to-day basis, daily, and on an hour-to-hour, minute-to-minute, you are going to guarantee trading volume for them, and therefore the trading educator is guaranteed a monthly income, not from his trades, but from the IB agreement. From the introducing broker agreement, because he's incentivized by the trades, the frequency of your trades and the volume of your trades. The more you trade and the larger the volumes, the more money they get, because they get 15%. They get 25 to 30% of the spreads you are paying, right? That's what happens there. So number 4, they will always say that how to recognize fake forex traders and fake forex trading educators. They will say that trading is easy. That's what they will say. You just need to follow these lines on the chart. They will show you some technicals. Just follow these lines on the chart. If this moving average and this moving average crosses up, you buy. If this Bollinger Band and the RSI comes down, it's overbought, it's oversold, buy and sell. And then they will say, here's some signal, follow these lines, buy here and sell here. That is nonsense. This is basically, the educator has no systematic process and does not know how to trade. This is exactly what it means. Because when you professional traders, regulated professional traders who trade at hedge funds and investment banks, they have systematic process, and they do not trade based on technicals. Technical analysis are just basically indicators using prehistorical prices and putting them in some mathematical formula, and then having a model, and therefore if the price closes up, then they expect it to go up, because statistically it seems so. But professional traders do not take positions in the market or in any asset or in any instrument based on a technical indicator. They take it based on fundamental drivers, and therefore they will use technical indicators to time their trades, such that, okay, I will have to enter this trade at a key level, not enter the market because it's at a key level. You have to have the positions in your trading account should portray your worldview. if you have a worldview that generally the stock market or the S&P 500 or the Nasdaq will be up in the next 3 months or the next 4 months because of the leading indicators you have watched, and maybe you have seen, you are predicting that the US tech economy is going to boom in the next 6 months, then that definitely means the Nasdaq will go up, right? But you have to look at key technical indicators, leading indicators, numbers that you have to put in your spreadsheet, and you have to calculate, and you have to see the trend, and you have to look at volume, right? For example, if you are talking about the Nasdaq or the S&P 500, you have to look at the VIX 500. That will show you the volume. It's using calculating volume from the options trading. So that's another concept, but it calculates volume, future volume for the month, what you can expect in the month. That you can use that with the VIX 500, right? So the trading educator was telling you some signals, and is trying to make it look like it's easy, right? They just follow these lines and on some technicals. Technical analysis in a professional trader's toolkit is just 20%. It's just used to time the market. They take positions based on fundamental drivers, and we will go deeper into it probably on the channel as well, right? So the educator has no systematic process and doesn't know how to trade. And they're trying to make it, the only way to actually get people to come in is to make it look like it's easy, right? That's the way to make sure that the middle class people and the average person would tell him it's easy if you just follow these lines and this, and then you just need to have at least a 2,000 or what, just limited amount of money, then you can start and pay for the signals, and therefore I will tell you when to buy and when to sell because I know what the market is going to do next, which is stupid because no one knows what the market is going to do next entirely, right? So the only way to make you join and make majority of the people join is to make it look like it's easy, which is not easy. It's hard. If you have been trading for a while now, you know that what I'm talking about, and therefore you probably should get over that. It's not easy. Number 5, they will tell you that psychology is the most important thing in trading, which is nonsense, right? Then this again just tells you that the educator has no systematic process and doesn't know how to trade. So what about idea generation? You can have a good psychology, but you need idea generation to be able to enter the right positions and the right trades, right? So you cannot say psychology is the most important thing in trading. Mostly this type of statement derives from someone who was trading, and then because he deposited this amount of money, and then he realized that one of the reasons why he blew the account was because his psychology was not good in this part of the trade. Then they will say psychology is the most important thing, and then they will deposit again, and the next time they lose the money, and then they will say, nah, this time money management, risk management is the most important thing in trading. There is a systematic approach where all of these things contribute a certain percent, and therefore once you have this systematic approach, then that is nothing can act singularly to contribute to consistency in trading, right? So psychology is the most important thing in trading. These are the type of things they will say. No, this basically just means that the educator has no systematic process and doesn't know how to trade. And then they will also say all you need is risk management and you will make money trading. What about idea generation again? Idea generation is you going into a trade, knowing the NFP number 6 months from now, right? Knowing the NFP number a month from now, 3 months from now. And then when the NFP number is released 3 months from now, you're basically just using the liquidity of the retail traders who know nothing about it, and then to get out of your trades, right? So you need idea generation to enter into positions on a reasonable basis. So this again, traders telling you that all you need is risk management and you will make money trading. This educator has no systematic process and doesn't know how to trade. Number 7, they are most likely to show you lifestyle messages as part of their marketing. They like lifestyle messages as part of their marketing. They will say, get the lifestyle you have always deserved, or one day you will own a car like me. These are the things they will say. One day you'll own a car like me. So these are the things they will say. The educator is just trying to distract you away from what is important and trying to tap into your desperation. They like sending these lifestyle messages as part of their marketing. Get the lifestyle you have always deserved, and then one day you'll own a car like me. This is nonsense. Complete. And therefore, number 8, one of the things again that you will have to see to recognize these fake trading educators is they have manufactured backstories. Fake traders, educators must convince people that they have many years of experience, or they are the wunderkid traders that came from nowhere and they have a secret sauce, right? So they will usually say they turned a $10,000 or 100,000, or they will say they turned the 20,000 or 500 or 1,000 or 2,000 into 10,000 or into $1 million in a short space of time. This is what they will say. Or you'll find all the guys with gray hair, and they will say that they worked at the hedge fund or they worked at a well-known bank. However, they never really didn't work at the hedge fund or the investment bank. Most of them just worked in non-regulated support functions like IT or operations at the hedge fund or investment bank, right? So the hedge fund the hedge fund lie basically is just particularly is very disingenuous because it's just preying into the lack of industry and knowledge and understanding of the retail trader. And therefore they use these kind of things because most people don't have an understanding of hedge funds and how investment banks work. So they will say these kind of things. Just because they work, that doesn't mean they were traders. And then number 5, they have manufactured trades and deceptions. They have manufactured trades and deceptions. This is hindsight trading, what I call it, right? So they will be active on social media and they will be posting screenshots of charts with arrows showing where they bought and then where they sold. They will show on social media, I mean, even on status, they will show arrows where this is where I bought and this is where I sold. And then they will show key resistance, they will show key support or resistance broken. And then they will just say, I just made 30 pips, I just made 50 pips. Nice. These are the type of things they will say. I just made 50 pips. They will show you a chart where they bought, where they sold, where they entered, and they will show key resistance broken, and they will say, I just made 30 pips. Be careful of this nonsense. They are basically just fake traders. They are just trying to bring you in and try and show you that apparently this is what we do and we know these things. We know the future. This is nonsense, right? Number 10, you will also see that they will be doing some kind of predictor trading, right? What they will do is they will post a chart with a support or resistance level with a catalyst. And then they will put a narrative, and then they will say like, prepare for the big move. This is what they will put in the status or on IG or anywhere they will post the support and resistance and lines, and then they will say, prepare for the big move, right? And then followed by that, it will be a screenshot. Followed by that, it will be a screenshot of a trading account that shows them making money. They will, after they've shown you that chart with support and resistance, the chart will be followed by them making money. And then the narrative there on that, the caption probably will be there. I knew it will break the resistance. This is what they will say. After posting the chart with support and resistance, then they will say, I knew it will break resistance. I just made 40,000 and it's only 10 o'clock in the morning. That's me done for the day. I know these are interesting things. So these are the things they will say. I knew it will break the resistance and I just made 50K or I just made 4K, I just made 500 and it's only 10 o'clock in the morning. That's me done for the day, right? This is quite literally all the streak in the broker's playbook. And this is one of the main reasons why no professional trader will ever post their trades on a social media or publicly. Never. So this is dating back to the 1920s during advisory broker periods. Like during those periods of time, what the advisory brokers, I think you should watch a movie, Wolf of Wall Street, or the rugby traders. Go and watch that movie. You'll see how the advisory brokers worked at that point in time, right? So you'll understand what I'm talking about here. What they will do, anyone with any respect or any weight in the industry will never post their trades to complete strangers or the general public. No one. Why? Because every professional trader knows all the dirty tricks and fakery tricks, and a professional trader will lose all. If you are a professional trader and you do these things, you will lose all your credibility if they did so, because probably all the professional traders know that you are bullshitting around. They will know this, right? You will see them on their status, these fake traders putting these status charts up and down. I just made 4,000 in the morning and I'm out. All this kind of nonsense. Anyone with any respect, with any weight in the industry, will never post their trades to complete strangers or the general public, because they know this. Professional traders know all the dirty tricks and fakeries tricks, and so it's a complete nonsense. So another thing is that it's also what they do as well, which is not so important. I will cover it later, right? Not so important. Other areas of trading infrastructure where IB agreements and create conflict of interest, right? So now IB agreements are not just found on social media, and people are showing their links and saying, sign up with this broker, it has this fast withdrawals and what. It's not only found there. There are a lot of areas where you will find IB agreements which create conflicts of interest, and therefore I will show you there. Number 15 is, for example, is managed programs. Basically around Namibia, South Africa, you'll see them most of the times. Small boys or don't really know this, but the big kids or the so-called big kids, fake gurus, the type of account management. What they will do is, with their affiliate link, they will have a trading account with that affiliate link. On that trading account, they will take your money and put it up there. So therefore, they will have 50K on that trading account. And then what they can do is actually then now, because the account is an affiliate account, and if he enters more trades in large volumes, even if he blows the money, he's getting 15 to 25 to 30% of the commission there on that trade. On the other side, back door, behind it. So this is where you give your money as a retail investor to a trader to manage, and then into a fund. Or but this by definition, these guys are not, they are not registered really. They are not regulated. So they claim to be professional, and therefore they will manage your money. They will say they make a lot of money, right? So what they will do then in this fund is that if they remember the account, however, remember the account in which the money is deposited. It's a retail broker account, and therefore it is affiliated to the broker. The account is sent up with an affiliate link, and therefore in this fund, what they will do is if there's a lot of money, if the fund is up, then they will churn the account to make commission. They will be trading small trades, fast, a lot. They will be taking these trades. This is to generate commission. This is to generate commission. Commission on because the account is affiliated. The more trades they enter, the more commission. Remember. So if the fund is down, if the moment the account is low, then they will take less trades, right? The idea is just to take more trades and less trades. Therefore, they pay the commission. That's essentially what happens. So another thing that you will see in these managed programs, this managing account management and all this kind of nonsense, they also never tell you their true leverage or exposure. They will never tell you these things. They claim higher returns on their clients' margin in the last period of whatever. Like they will say that they will show you screenshots of the amount of money they made, right? So they say that I was just managing my client's account, this amount of money we made here, less than here. But look at this. In the trading year, there is approximately around 252 days, or 250 or 251 days. In that screenshot he's showing you, it's just probably 1 day's work. What about the rest of the 250 days? How is this trading day going? And you'll see, because of that risk appetite and all the nonsense is up to there, it's unsustainable. It's complete nonsense what he's doing there. So the screenshots he's showing you and the trades he's showing you is just equivalent to a 1 day move. They could be, and those accounts can be they could be leveraged 1,100 times. They could be leveraged that. They could have taken a leverage of 1:10,000, 1:1,000, and therefore it's possible to do that. But that is only 1 day's move. But what about the rest of the 250 or 249 days left? You don't last that long. So you will see, that's why you will see 90% of them lose money, right? So another area where you will find IB agreements is automated algorithmic or managed trading, copy trading. So usually what you will have is a master account. You will see them there. They will say, just follow me. You will trade. I will just register your account. I will attach your account to my account. But this master account is at the brokerage account, and it's an affiliate link. So if you are doing computer science, you will know that this is where you link your trading account via an API to an automated trading software. So you link this trading account to an API, and therefore what will essentially happen is that the robot or the trader, when it's taking this essentially automated algorithmics, when the robot is taking the trades, and then your account is linked to the master account that is linked to the affiliate link, then whenever the account is taking the trade, your account is also taking the trade. So essentially what happens is this software is usually based on rules, on technical rules and systems, right? So that make trading decisions based on a minimum and a maximum parameters. So usually they use RSIs and momentum indicators, and therefore this software is programmed to take short trades, to trade over short windows, times of short time frames, right? And then it will have automatic stop losses and guaranteeing. This will guarantee churn. They will promote it and say that we have proper risk management, and then we are only risking 2%. It's exactly, that's the point. So when they are risking 2%, that means they can take a lot of trades on that. Remember, the idea is for them to take a lot of trades, and therefore what they will do is they will trade over short windows of time, and they will take automatic stop losses, short tight stop losses, guaranteed to churn, meaning they will be taking more trades, right? And therefore, basically, the sellers of these softwares or the vendors of these softwares, people who sell these softwares have IB contracts. They have IB agreements with the brokerage platform. So they usually receive a markup on the spread. So with these thousands of people accounts that are linked to this traders master account, they are losing their money because the spreads they are paying the guys that account. The main account is getting 25 to 30% of the commission. So 90% of people lose money. So brokers have essentially, what the brokers simply did here is that they have outsourced spread and commission, and they are now pickpocketing it from a machine. So they are using a machine and a robot to just enter the trades over and over and over again, and therefore they are making sure that the spread and commission is being paid. That's essentially what happens there. They are pickpocketing you, right? So another thing is social trading. Social trading. So you have seen them you have seen these guys all in these weird platforms, right? You go online and you see all these guys, they are in weird places around the world, and then you'll find them with nicknames. Forex Master 179. Or you'll find them with who, Forex, who, what. Go to a professional trader in JP Morgan or Goldman Sachs or any hedge fund. You will never find them with this nonsense. They are there. Trust me. They are the only ones with these funny nicknames with nonsense. Just trying to scam me. That's exactly the idea, the ideal side there. So he's a Forex master, he's a Forex guru, he's a Forex what? They will have these funny nicknames. So right. So you, for example, I think on MT5 or MT4 website, you will find this type of social trading, right? So where they will link your account again to they will show traders who are trading for the week, and then they will show that this trader was up 100% last week. He's based in California. He's the new master trader on the block. So they are the MT5 is promoting him basically, and therefore what they will say is you can just he made 100% return, and they don't tell you 100% return can be $100 that was turned to a $200 that was 100 times leverage. So which is very simple to do, right? But then what they will expect you to do then is actually to deposit your money and then forgive these guys who were just trading a $100 account to a $200, and that was 100% return, and then you're giving them 25,000 to go and trade, 10,000 to go and trade. Complete nonsense. So this is where you automatically follow again via an API an individual. So who is apparently making money trading in the financial markets via one of the new social trading platforms like MT5. If you go to their website, you will find these kind of things. So how this social trading works is exactly the same way as automated trading works, right? The trading softwares. So except here with this social trading, you do not follow a program software making the decisions. Apparently you are following a very clever human being. So they just replace the robot with a human being with social trading. So what happens here again is the social trading website will have their own platform. Again, they will charge commission, spreads, and financing turn and OTC gain on losers. So basically they're just becoming brokers themselves. Or if they are not doing that, then they have IB contracts again with the broker. So they provide the platform, and then they are incentivized by volume, and again they will advertise the type of trades they will advertise. Just go on social media and you'll see what type of trades they're advertising. They call it barcode. A lot of trades, 10, 20 nonsense trades. Yeah, and you are going to enter it. And remember, you are affiliated to his account. Therefore, you enter these trades and you are trading large volumes. He's making money from you. Essentially, this is common sense. You should understand this, right? So that's essentially what these are the type of things they will promote. They will promote they will advertise channels. A lot of trades, barcodes. This is what they will do. So these are apparently their best performers, right? So again, it is rarely advertised how much capital their best performers are managing, right? So they may have 100% gain in a week. However, this was just increasing $100 to 200 using 100 times leverage, right? So how on earth can you trust these people with such amount of money? A lot of money, right? So, but again, these are areas where you will find IB agreements again, social trading. So you will find them with their weird names and all of these kind of things. Other things is online forums and information vendors. If you see online forums, they will be promoting these kind of things, and you'll see everywhere you go online. You'll find XM advertisements, you'll find FX Pro advertisements, and then those guys will be giving their comments there on what is the best way to trade. These are the best instruments to trade. What, and then you think these guys are giving information for free, proper information. Apparently, they are saying the best way to trade is this and this. They trade and follow this indicator here, and then you will see XM flyers and FX Pro flyers flying there. You click them there, they get paid. IB contracts on these forums. They're IB contracts. That's just basically what is happening there. So they are not giving that information for free. They are selling the narrative. Therefore, once you sign up with that IB contract and then you follow what they are teaching you in that platform, you'll be trading a lot of times and you'll be trading nonsense. And therefore they make money. Simple as such. They're incentivized by the large volumes of trades they are taking. Right? So I mean, I believe that is quite essential that I've said there with you. if you want more details in how this works, because of time, I don't want this video to be so long, which is already amounting to 30 minutes. This is essentially what happens, right? They are pushing an inversion narrative, trying to make you trade more and more because they are being paid back though by these kind of things, right? Therefore, it's very, very critical that you not trust them, and therefore you must approach it the professional trading way. The real traders, all of us aspire to trade consistently and profitably, and the only way to do that is through professional trading, how they approach it. And therefore, that's 80% fundamental driven, 20% technical driven to help you time the trade. And therefore, please, because of time, let me cut the video short. You can comment below what you think. Comment as well about the traders you know who are always advertising on IG. Go and follow this link. Sign up with my broker. Comment below the brokers you know in your country, particularly Namibia, South Africa, and around Asia. Comment below. You know those traders who are always, and educators who are always advertising their brokers. Comment them below there just for fun sake or for interesting sake. So subscribe, comment, like. It will help with the YouTube algorithm so people can hear these messages, so we can avoid people being scammed, and so we get young people to really focus and not tarnish their dreams and say, I'm just going to do forex. It's not easy. So they are making it look easy so that you can go jump in and then you make them monthly salary by trading nonsense over and over and over again. So guys, thank you very much for tuning in. Stay tuned. If you have any questions or any type of or things you want me to discuss and make videos about, comment below and I will surely be glad to do so. So I'm very, very thankful for you guys for coming by. Hope you have a great day.